What's up guys? So today we are going to discuss about this trade that we took last week on GBPUSD, and I will be explaining why did I take this trade, what was the mindset that I had to take this trade, and everything. So let's dive into the video guys. Okay, so coming here to this clean chart of GBPUSD, the first thing that I was aiming to this trade right here was to identify in which situation are we currently on the market. So as we can see, we had this high right here that was already mitigated by this zone, and if we come down here we can clearly see that we are in an uptrend. Why? Because we have some break of structure followed by break of structure. Okay, so we can clearly see this one as a break of structure. We created a new high here, break of structure, and here also a break of structure that was generated right here. So if we have break of structure, means this is our high and this will be our lower point right here. Okay, this will be our low. If we had again a break of structure, this will be our high and this will be our low again. We have break of structure, this will be our high, and this still our previous low. We can consider this as our new low, because once the market reached this zone right here, it started going up. But then we must see one thing here. By this break of structure, we had this imbalance candle, meaning there is some liquidity that's laying under this zone, so we can mark this zone as our liquidity zone. And then again, if we come here and see this clearly, okay, this is our current low. We have this new high, and then now we have this supposed new low right here, new low right here. But then we must put one thing in our mind: we will only have a new trend or a change of character once we break this previous low right here, meaning this previous low is the one holding this movement to the upside. If we don't break into this low, then we still don't have a change of character. That's why I did not consider this movement right here as a change of character once we broke into this low right here. So the 2 points that are holding liquidity right here on this point besides this one is this candle of imbalance right here, and then this low right here. So meaning these are the two important zones that we can mark in our chart as some interesting points that we can take buy positions. Okay, so once we had this break of structure that we grabbed some liquidity right here, some people could have entered the sell position. If we take a price and discount tool right here, we can clearly see that we had a retracement to the 50% zone right here, and then some traders entered the sell position with a stop loss under here or under this wick right here, and then with a take profit of 100% that it was here or at the following liquidity zone, that is this zone right here. But I did not take this sell position, so we can delete that, because I only found the market when it was right here. So at this point right here, I already marked my interesting points that are this one right here, this one that is the current low that is holding some liquidity, and this previous liquidity zone right here. So I will only consider entering a sell position once we break this previous low that is holding all this this new high movement. Okay, so once we broke the first low that was here, this was the London this was the Asian low. Okay, so meaning we have two liquidity points right here. We have the Asian high, that is this one, and we have the Asian low, that is this one right here. So meaning the market to move, it needs two things. It needs to grab liquidity from somewhere to either push the market to the upside or to the downside. So currently we can see that we are in an uptrend, meaning we are aiming to target a new zone above this zone right here. So which zone is this one? We can come to the higher time frame and see, okay, we have this high right here that is not mitigated here, meaning this can be our interesting point to go and search for the market to mitigate this high right here, because it contains some liquidity. Why it contains some liquidity? Because it grabbed liquidity from this previous move right here. So when this high was mitigated right here, this high was mitigated right here, it grabbed some liquidity that was holding up on this zone, meaning this zone right here is now a zone that contains liquidity that in future, even if the market goes down, it will need to come and break this zone because it's holding some liquidity right here. So now we already understood where the market was moving when it started this uptrend to the upside. It needed to grab some liquidity somewhere. Where is this somewhere? We already have this point right here. Before, if we see on this downtrend, we can see this is some descending highs, meaning there is some liquidity right here. There is also liquidity above. So there are multiple points that are holding liquidity on the market, but currently we are going to work only with what we have. That is this zone right here. So once we grab the liquidity from the lower side of the Asian session that was right here, the next point was this liquidity zone that created this imbalance to the upside. So once we grab this liquidity, I already positioned my buy limits right here. My stop loss was below this zone right here. Why? Because if we break into this zone right here, now I have a clearly change of character, meaning my stop loss will be here, and once we break this zone, I can enter sell position, grab the next point, that is, for example, this low right here that we marked. Why? Because once the market reaches this point right here, it will need to make a retracement either to the 50% or to the zone that is holding liquidity, and then I will again enter a sell position. Okay, so my stop loss was in a safe position right here. If we come and break this zone, I will enter sell position. If we don't, we will have a sniper entry. So once we got tagged here in this buy position, my take profit was where? Was on the zone that needs to be mitigated, that is this zone right here. So our stop loss is there, our take profit is there, and our entry is here. So once we got tagged here, after grabbing the liquidity of this point, we enter the buy position. It came some news for the USD that was bad for the USD. Well, and then one thing is trading based on news and trading doing your analysis and seeing where the market needs to go to grab liquidity. It's all about liquidity. Market needs liquidity to move. So once we got tagged here, the news came and it started pushing to the upside. To where? To grab, we already grabbed the liquidity from sell side position. Now we need the liquidity from buy side position. So once we grab the Asian low, now we are coming, we targeted the Asian high that it was here, and then we made this new high right here. This was Thursday and then Friday, and then this all movement only got done by the new week that it was Monday, yesterday. So once we broke this high right here, we could have picked a price and discount tool or Fibonacci and target the 50% zone to re-enter a trade position. So meaning a lot of people grabbed this zone right here once they saw that we broke this high, and this was not a downtrend. So once we break this high, then the idea of a downtrend or a change of character is over. So once we took this high, we made a new high right here. We could have use the Fibonacci or pricing discount, target the 50% zone that is right here, and then with this we can place our new buy position right here, the 50% zone. Our stop loss can be below this wick right here or below your levels of Fibonacci, and the target will still be the same that is up there. As we can see, we had this retracement to the 50% zone, and then the market started going up. This was already Saturday market closed, and then Monday market opened and Asian session until we got to the take profits on the opening of London session. So this was the breakdown of the trade of last week and on GBPUSD that we took. So thank you for watching, guys.